Welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope you had a good weekend. Got lots of stuff done. I tell you what, here where we're at in Florida, people just pretty much decided they were going to go back to doing what they were doing. Back to the beaches, back out driving around, doing whatever. A lot of traffic out there, and boy, it was so nice for a while not to have any traffic on the roads. But I don't know how it's going where you're at, but I hear there are 29 states that are opening by the end of the month. Maybe we'll cover some of that. Okay, let's get started here. This is, we call it Closing Beats, a quick show that we do, talk about the stock market, the good, the bad, and the ugly for the day. We'll cover all of that, and as always, share some interesting details or stats with you. We're also playing a game. It's called Guess the Dow. If you want to take a shot, there's a website on the screen. You can take a look there. Our Thursday class for customers. Every Thursday night, we do a class. We call it Wine and Wealth. We've got a sort of a call it a speakeasy back there where we've just kind of set up and hang out and talk about something. This week, we're going to cover the Spanish flu pandemic back in 1918 and go over not only how the markets performed, but how people went back to work and what happened when the markets, when people went back to work, how the markets responded. And then if you remember, they had to shut down a couple more times. So how the markets responded, we're going to go through that. We've got all the data and everything to share with you. Also, our Jazz Artists of the Week, we're going back and forth. We go back old school, we come new school. So this week is new school with Pat Metheny. You know who Pat Metheny is. One of the better songs of his that I like is called First Circle. It's in 22/8 time signature. So if you're feeling a little rambunctious tonight and you want to play along with some different time signatures, you can clap along to the song. That's how it starts, actually, in 22/8 time signature. Kind of a fun thing there. Anyways, let's get started. The stock market was higher today to start the week. You got 358 on the Dow, 41 on the S&P, 95 on the NASDAQ. If we look at the S&P 500, we're still in the chop zone here, back and forth, which would lead to believe that maybe tomorrow would be down if you were playing the game that the markets have been playing lately. That's the S&P 500. You've actually got the Russell was the strongest of the day so far, or today. So you got over a 4% gain, the Russell 2000 back towards to the 50-day moving average where it stopped for the day. The NASDAQ was the weakest, but it also is now positive on the year by just over 1%. So that was the first to get back. It's done that before, but it went back positive for the year there. News today, we're basically just strong on changes in the virus news over the weekend there. We've got testing counts spike, number of tests that we can put out there. Positive test rates are dropping towards that 10% mark. All is looking good there. And more importantly, there's this talk of and sort of new narrative in the political space about reopening the economy. As much as maybe one side doesn't want the economy to open, the other side does. Now it's too late. The media has grabbed onto the momentum of who's opening, when they're opening, what you can and can't do, what the rules or phases of the different openings are. Well, the market's like that. And so it means that we get back to work, we get back to spending money, which is what the stock market's looking for there. And so we got a lot of interesting things coming up in terms of what to look for as the markets and economies get back to work there. It was also one of those days where if you look, well, you could look at the NASDAQ, right? The NASDAQ didn't really participate. Your big, mega, super duper cap blue chip or large cap stocks there, they didn't really participate today, which is good news because tech has been leading the way. Well, tech really took the day off there, and you saw a lot of sectors, which we'll go through in a second, like financials, industrials, REITs. They sort of led the way today, which is good. You had the rest of the market come in to try to do the heavy lifting. We covered that last week as well. Now, it's going to be a volatile week, so don't assume that this is just somehow going to bleed higher all week. We're going to have some volatility, and that's because of earnings. If we take a look at the earnings here, we got a lot of big names reporting earnings. You have got 3 of the $1 trillion market cap companies, Microsoft, Apple, and Amazon. You can see on the screen there. They're going to be reporting earnings. Interestingly, Amazon is the most volatile through earnings there. That's the average move on earnings. I'm sorry, the average volatility on earnings, so the range. Apple is pretty volatile as well, and Facebook is one of the ones that offers the most volatility, or the second most volatility out of all of these companies reporting this week. We look to see some of the stats. Who has the best historical beat rate in terms of earnings and revenue? If you start at the top here, I color-coded them for you. MasterCard, 94% of the time beats on earnings, 80% of the time beats on revenue, so looking good there. You've got Facebook in the mix, very good. That'd be your better one out of the group there. Visa also is historically strong, and then we put in AbbVie as well. If you like looking at stocks that have a higher rate of beating on earnings and revenue. Some of the weaker ones are going to be Starbucks, which we'll cover in just a moment. You got American Tower in the mix as well, and then you can kind of look and see like who's not very good at beating on earnings or revenue if you're trying to look there. Your biggest losers, or your biggest gainers, Facebook, MasterCard, Mondelez. Your biggest losers, ExxonMobil and Vertex. ExxonMobil could be one of those dividend aristocrats that has an issue, but they said they're going to keep the dividend. They have no issue doing it. Chevron, interestingly, said the same thing. So as far as those go, we'll see. Kind of a busy and important week for them. As far as the videos that we've done, today's video, the FinTips video, was on should you take a loan from your 401k or take from your IRA. We're just going over some of the tax and payback sort of consequences and things there, in case you're interested in that. On Outside the Virus today, we talked about the top performing dividend ETF funds, and they were the top performing pure dividend ETF funds. I probably could have highlighted that a little bit better. Any growth-oriented or tech-focused dividend funds, we left those out. These were just the pure dividend funds. We gave the breakdown in terms of who's the best performer over a 5-year time period, yields and expense ratios, all that stuff. All right, let's talk about the sectors here in the stock market today. Every sector was higher on the day. You had your bank stocks higher. Banks were higher on the day by just over 3%. Remember, they weren't participating. All of a sudden, they come help and they start participating. That's a good thing. Regional banks look good as well, up 6%, almost back to those highs. They have also not participated in the mix as well. Healthcare now positive year to date. Well, this is the XLV. So up 1% on the day there. Healthcare continues to be one of the leading sectors out of the group there. We pointed that out little by little. Retail, look at retail go above the 50-day moving average. That's going to be a 5% gain. Looking really good there. More talks of the economy opening and stores being able to open in phases puts a lot of these retail stocks higher. And if we look, you got Kohl's off the bottom here, about 17%. You got there you go. PVH, about 15% off the lows, and Nordstrom, that was one of the better performers as well, 13%. These guys are highly beaten down. I'm not pointing them out for any secret reason or anything, just they had a good day. Basic Materials, up 2% on the day. They're also back above the 50-day moving average. Notice that tech was sort of flat. Now it added about 1%, but generally on the day it was sort of flat. And so it just didn't really participate, didn't help everything else out. I actually really like that. If you're a bull, then you probably like that as well. Well, wouldn't be right if we didn't talk about oil. Let's go there. You've got oil down 23% on the day. And if you look, everybody's asking about the USO, covered it in great detail about what they were doing last week. Well, all that's changed this week. USO is like throwing their business model out the window and essentially doing whatever they want at this point. And I'm not just saying that because I don't have anything against them. I don't love them or hate them or anything. But that's what they're doing. The last 4 days, they have adjusted their portfolio. Every day for the last 4 days. That's impressive. What they decided today was that they were going to just leave the June contract altogether. So if you know how this works, we covered it in the previous, the closing beats and everything. But they were going to leave the June contract. Now, USO makes up about 25% of the daily volume or the total volume on crude oil. So if you look at the June contract, which is the active contract at the moment, you notice that the pressure, at least some of that pressure, came from USO today making their adjustments. They left the June contract. I believe they moved out to September now. So they've got July, August, and September. They're trying to reduce the volatility. They don't want people to run away from their ETF. They're also doing a reverse split. 8-for-1 should kick in any day now. So the oil excitement continues, and USO hopefully has found something that they're willing to sit back and relax a little bit with. You could actually see during the day when they were moving those contracts. You saw USO briefly pause, and it looked like it was halted for a minute, and you see the contracts going through on the crude oil futures. So they should be done today. If you have a TD Ameritrade account, they've decided that they're only going to allow closing trades on the oil futures contracts for June and July, so you cannot start a new position there. Looking through, I don't know if I've ever showed this, volatility in the oil space. You know how we look at VIX? So there's a VIX for a lot of different areas of the market and a lot of different commodities, especially if they have futures contracts behind them. But this is the VIX, which covers the, let's just say, the volatility on the S&P 500. It's the most common thing that people look at. Well, what if you're looking at oil? You don't really care what the S&P 500 is doing in terms of volatility. You're looking at oil and oil's volatility. Well, if you want to look at that, the symbol is OVX. It's not a tradable thing, or it is tradable, but I don't think many platforms allow it. You probably have to use the options there. But anyways, here is the volatility just on oil. Notice that it's obviously been rather wild lately, spiking from 100 to 500. But currently, today was pretty muted, right? So overall, pretty muted day for oil volatility. It wasn't a muted day for Diamond Offshore. They are the latest casualty in the oil space here, filing for Chapter 11 bankruptcy. You know, if you own it, now you know, right? I mean, it's official. So that sucks. All right, let's take a look at, let's do something a little different here. So a lot of you watching, you just kind of tune in to see what's going on in the markets, but you have a 401k, right? If you have an IRA or a Roth IRA, well, I hope you know, wear the shirt, keep us in mind, come check us out at Jazz. We manage those for people. But what if you just have a 401k or some sort of mutual fund plan at work? What's going on with you there? Well, we're going to break it down a little different today. So what we do is we have sort of a graph of the 401k performance today to kind of show you if you have a large cap growth fund, for example, then today you notice, or you will notice, that the performance was great, but it wasn't like amazing and off the charts compared to everything else. The leaders today would be your small and mid-cap value funds. So, you know, you're looking through the list and you see all your choices there. You got your small and mid-cap value did the best today. Actually, value as a whole here, if you look over here, they're the best performing area and have been. The value area is getting a lot of attention there. Large caps were primarily quiet today. They didn't do a whole lot relative to everything else. That's a good sign, by the way. But if you're someone who said, I'm going all in on large cap value, large cap growth, or core, that just means index. So if it's the large cap index, that's what the middle column is. I don't know why we put core there. But anyways, that's a look at what your 401k likely did today. So maybe that's something that's kind of interesting to you. Thought we'd try something a little different there. If you like it, maybe we'll keep up with that there. All right, let's take a look at some individual stocks here and we'll get things rolling. Bed Bath & Beyond up 22%. This is another retailer. They're like, hey, we're going to open some stores. We're going to get back to work. This is great. However, their online sales, they reported up 85%. So people are still shopping there. They're shopping online and taking advantage of those coupons that they send out. Big Lots. I'm going to cover a unique, different type of video on how to analyze the retail sector for opportunity. Boy, you called it. You called it on. Sorry. Coughing. I'm going to cover Big Lots later on something, kind of an analyzation of if these different states are reopening again, how do you kind of find out, where you should be looking. Anyways, Big Lots up 11%. On the day, they expect their sales to continue to be strong. They've seen strong sales. Their stores have been open, by the way, so people have been able to shop there. Up over 50% now just this month. You can kind of see it on the chart there. Back to the 200-day moving average. It's the best month for Big Lots since I was a senior in high school. That's all I'm giving you. This is it. Take your guesses. Tesla higher today, 10% gain on the day. They're asking some of their employees to come back to work, some of them. It's a very small amount, just some of them, right? Beyond Meat's down on the day by 8%. Downgraded at UBS. The analyst at UBS said, nope, you guys aren't taking into account the risk premium for investing in this stock, as it's not pricing in a downturn. Basically, he's saying it's overpriced given the potential of the next little downturn here. It's not going to be able to do too well through that. Caterpillar added 1% on the day. Caterpillar was actually downgraded by Morgan Stanley one day before their earnings. They've got earnings coming out in the morning. It says that their non-residential business is going to hurt the stock performance overall. General Motors, there you go, up 2% on the day. They cut their dividend. That's it. Dividend gone on General Motors. They're stopping their buybacks as well. Disney, up about, hey, Disney's up 5%, man. We didn't cover it on Outside the Virus. Well, obviously, this is higher because of the idea of reopening. And if you look at Disney's park hours, they've started putting in their park hours as of May 17th. So I don't know if that means the park's going to open. I don't think that does. What I think they're doing is they're getting the calendar ready again, and then they'll just start moving it week to week so that somebody doesn't have to go in and program all that. Anyways, your fun fact of the day, I got to give it. Anytime Disney's over 2% on Outside the Virus, I'm giving a fun fact. Your fun fact about Disney today, do you know in Animal Kingdom, I'll do this one. Animal Kingdom, there's a ride called Expedition Everest. Okay, roller coaster. It's okay. It's not great. It's okay. But in there, you actually come face to face with a Yeti, and it's a real life, like it's not a cartoon or an image or anything. It's a big old action-packed figure. Well, in reality, that figure was supposed to move. He's massive. I think he's like 2 or 3 stories tall. And he was supposed to move and be like, rah, and come out at the roller coaster when you're stuck there for a moment. Well, when they built it, they didn't account for the weight of this Yeti. And so the floor that he's on actually cracked and it broke the Yeti. And so that thing that's supposed to move, the big white guy that's supposed to yell at you there, he has never worked. It's supposed to work. It was supposed to move and it never did work. So what's going on, man? Speaking of not working, like this, and we're back. So it doesn't work. And the actual Imagineer, the heck, man, just trying to do my thing. The actual Imagineer says, you know, one day I'm going to come, I want to fix that. But it has not been fixed and does not work to this day. All right, that's it. You don't need to bug you with all that stuff. Anyways, you had 7 new highs on the day today. You had your data center REITs. We covered both of these in detail to highlight why these REITs are doing well relative to the others. Digital Realty hit new highs there, and Equinix, EQIX, there we go, also hit new highs as well. These are sort of sloppy breakouts there, I guess, if you want to look at it that way. Another high was Danaher. Danaher hit new 52-week highs. First time since January on that one, so congratulations to Danaher. Also a little extended in the short term. There are no new 52-week lows today. That's a good sign. And what else do we have here? Stock-specific news, you got Boeing down just a little bit on the day. It looks like their timeline for the 737 MAX certification is going to be into the summer, if not late in the summer. Stock was just a little bit lower on the day. Also, Zoom. Zoom is going to replace this Willis Towers in the NASDAQ 100. That'll take place in 3 days. We did a social post on Zoom. What we did is we looked at where it's going to stand market cap wise in the NASDAQ 100, and then we looked at all the other companies that were technically smaller by market cap but made more money, and some of them a lot more money. So I was trying to make the argument. Is that fair? Right? Does that make sense? Does that make them seem like that's a great company? Okay, here we go. Earnings tomorrow. You got a whole bunch of them. You ready? Caterpillar. You got Dr. Horton reporting as well. Southwest Airlines, 3M, Merck, Pepsi, Pfizer, UPS. And then after hours, you got Akamai, Ford, Alphabet, Mondelez, Starbucks, and UAL. Looking at Starbucks here for a moment. Starbucks is going to be an interesting one in terms of earnings, and I will explain why. So Starbucks, they report tomorrow after the close, expecting 32 cents a share, and that's going to probably be pretty spot on because they've been very clear about giving updates literally every week, sometimes even more. They're kind of seen as like, hey, the blueprint for restaurants and how we're going to get these things back open, because Starbucks went through this already in China. Remember, they had 4,200 stores in China. They had half of them closed at one point and almost 80% of them closed at another point in China. And they went through that reopening process. So they got to see what works, what didn't work, and everything like that. Now, the CEO released a letter to tell us basically exactly what to expect. They're withdrawing guidance. They expect their profits to be cut in half. Earnings per share at 32 cents, which is exactly what everybody's expecting. That's down 42%, so basically cut in half there. And had a whole statement there. I won't read it off to you, but you know, he's basically saying Q3 is going to be the excitement where we start to come back and really see everything fired back up here. Company's got $2.5 billion in cash. They've got the ability to buy borrow $3.5 billion. And so, and they also said they don't expect to cut their dividends. So it's kind of interesting because not only is it a blueprint, the people are going to be looking for how do you plan to reopen your stores here in the States, but we also kind of know their entire earnings report already. We essentially know everything about them. So there should be no surprises on Starbucks. Starbucks, I would imagine, is not going to be very volatile because of that, because they basically, without giving exact numbers, they basically reported. It's not typically a very volatile stock anyways, and the average full-day earnings move is only 77 cents. So there you have it on Starbucks, a little bit more detail. I'll take a chance to try to answer some of your questions, and we'll go from there and maybe wrap it up. You like Disney? Yeah, me too. Are we retesting the lows? Actually, our last week's class in the dojo, I was thinking about maybe doing a membership type site where we can have these videos. There's a lot of great places out there that I actually would love to support, and if we could somehow make it worth it to you guys or people that can't be customers to be a part of like a sort of a membership site or something. I'm just trying to think of ways not to make like, there's no profit center idea here, but I want to start thinking about, all right, we're reopening again. Who needs help? How can we help them? So I thought if there's a way that I can legally have like a membership site with a specific focus to not getting in trouble, that's the biggest thing. That's why I haven't done that. But anyways, where I was going with that was you'd get to see videos like last week where we really just covered a study. And what we did is we studied the entire stock market to kind of show the probabilities of hitting a new low. So we went through every scenario and things like that. I think that kind of thing, there's the ability to offer it to the public without getting in trouble. We're working on it. It's an idea. That doesn't answer your question, but in the class I can tell you that the results were it's very unlikely that we're going to head to a new low. There was only one time in history that we did that. Now, interestingly, to give you a little stat, the one time in history that we did bounce the way like we have now and turn around and went to new lows, stock market fell 80%. So if we do make new lows, you can bet that stat's going to make itself front and center to the headlines, and people are going to be thinking, uh-oh, this is going to be nasty. That was the Great Depression, by the way. Yep. You've been posting videos on weekly trades and stuff. Oh, cool. Little by little. Yeah. I love it. I love that stuff, man. I wish we could do, more of that, but that's what it is. You want to hold gold, but well, that's historically a losing trade. Now, if it's a comfort trade for you to hold gold physically, well, that's, oh, you're talking about ETF instead of cash. Even that one. Historically a losing trade or an underperformer, not a losing trade. It's an underperformer. So it's more of a question of security. If you really believe that things are going to be really bad and everything and to the form of catastrophe or towards that direction, I can understand that, but know that you are missing out on long-term returns. So maybe it's a short-term idea there. I don't know. Yep. You think we're going to make a new low maybe next week? Oh, a new low at some point. Yeah, I mean, at some point, you would imagine that there's going to be some pullback. I don't know about making a new low in the markets, right? It depends on how long it takes, right? Because eventually, the markets just move on from highs. You can go back 10 years and we haven't touched anywhere near those lows. So it's, at some point you run out of time there. But people don't want new lows. I see you guys there. I love it. Facebook is after market close. Yeah, earnings, you mean? I think is what you're talking about there. Facebook is reporting this week looking for, I didn't put the earnings estimates there. Don't have it on that one. But yeah, it'll be an attention grabber as well. Do you like Zoom in the short term? You have a hard time buying a stock that's extended like that. I don't like any stock that's run its course, like the Danaher we were talking a minute ago. Extended in the short term, you don't want to chase that, right? So it's like, it's already ran up a hill, it's starting to get a little tired. Doesn't mean it's bad, just means it may take a break or pull back. I don't like to be the one that says, let's go ahead and buy into that kind of thing like that. Yep. Hertz and Avis, yeah, they're in trouble. They've seen revenue drop 85% just last month. So you got to imagine those are difficult ones, right? Well, maybe not one to be diving all in. Yep. We'll see. Yep. You think small caps? Well, that's the assumption today. So it doesn't matter my opinion. You actually got to see that today. So all of this reopening talk and getting everything back up and running, what did everybody do? They instantly said, well, small caps, got to be a part of that, right? So it's not opinion. That's just actually what's happening at the moment. People are running towards the small caps. They've got a lot of room to run, by the way, if this truly is a sort of significant area of a bottom. You think we'll have it? Well, we could have a 5% pullback in a day, right? We've seen that. So any move to the downside, which interestingly, oil hasn't really hurt us, but any move to the downside, yeah, you could 5% in a day or two is no trouble for this market today. Yep. Oh yeah. Is Ford in trouble? I don't know. Ford, the CEO did say that the car buying experience, the car inventory model, people out there buying cars, that the industry is going to take a hit. So you don't normally hear that from the CEOs directly, but he said it. Yep. Do you think these stock YouTubers are pumping up stocks after they take a position? No, you can't. There's nobody big enough to do that. It's just not something that's possible, right? Maybe in a 1 minute time period, could it spike 5 cents, but no. No, I do not think that's the case. From a volume standpoint, pretty difficult. Okay, yeah, basically that's the message of the day today. Anything that has been hurt by the economy being shut had a good day today by the economy sort of hopefully getting reopened again. We'll see how that works. We'll keep you updated on everything as we go here, but in the meantime, I'll wrap it up, and I appreciate you guys watching. I hope you enjoy the rest of your day, and we will see you tomorrow. Adios.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.